All right, what's going on, everybody? Excited to get started here with our first live training session. We will replay this webinar and post it for everyone to make it available for them. And when this is really interesting, I'm excited for this first ever webinar series over here. And it's something that we can do regularly because I think it's going to really help a lot of people. And at the end of the day, the whole purpose of this course is to get you trading profitable, right? So, troll free zone. I love the trolls, actually. Let's start this off. And first, I think we had some conversation yesterday in the CTM chat group that was really important, and we were talking about what our goals are. And I think it's really important of having those goals in sight as you start out. So we'll briefly discuss the goals of the program and the goals that you should be having for yourselves, right? It's really important to have that goal in mind when you're working towards something. And the first goal is turning the corner to profitability. There's no question about that. And from my experience, I'm seeing that, generally speaking, anywhere between 3 and 6 weeks, people are able to start at least following the trading strategy in the course and go to where they are slightly profitable to break even traders, which in itself is a really good feat. And that's the timeline that you should be able to achieve that in, though. It should be somewhere between 3 and 6 weeks, right? The next phase is then going on to about, let's call it within 12 weeks. All right, which is a considerable amount of time. But as far as becoming a trader and profiting from the markets, that's a drop in the bucket. That's absolutely nothing, though. So, during the next 12 weeks, after you finally become a profitable break-even trader, is you want to be consistently profitable, and we're gonna label that as 1% a month. All right, 1% a month. So if you're starting off trading and your goal already is to be making 10% a month, your goals are not aligned for success. Yeah, so Brad over here built this. Brad, who joined the course, then built this because he wanted to give back, and he's a web developer. I think at the bottom, over here we have Ethic Sites. This is Brad's company over here and the work that he's done, and that was awesome of him. And we're gonna listen. It's the same information right now on the other site, the JCL.capital site. The same course modules. Actually, the JCL Capital modules are more up to date. These will be synced shortly. And then after that, as we continue to improve and add more course modules, they'll both be synced. And or a later time you'll have access to this one, but that's neither here nor there right now. We're talking about goals, constantly profitable. 1% a month after first turning the corner of profitability. That should be your really goal over a 12-week period to get there. That's a good place to be. There's a video, one of the modules is Could Forex Make You Rich? It's a really important video to watch. I want everyone to watch it if you haven't already, because it talks about if you're making 2-3% a month, that's really quite extraordinary to be able to do in the markets, a 20-30% yearly return. And that is setting yourself up to make a significant amount of money through the use of time and compounding. You have to have your goal set from the beginning correctly and aligned correctly to what's achievable. So did anyone here have a goal of 10 or 12% a month? Absolutely not. There's no way that should even be something you're working towards. And this course, this strategy is not going to be able to do that for you. It really won't, right? The goal of this is to take someone who's not profitable in the markets and then in a reasonable amount of time, get them towards a position where they're able to make money out of the markets. And that's really the goal of this. And that's what you should be working towards and following and doing. And to be honest, if you're still out there exploring, trying new things and not following the methodology laid out in the course, well, then you have a long road ahead of you. That's not really the way to go. All right. So does everyone here, before we move forward, kind of understand of what their goals should be? And do they feel comfortable about working towards those goals? Maybe someone thinks that's not enough money. Well, that's debatable. But then this is not, the markets are probably not for you, right? Now, if you could achieve this, right, from there, you have all sorts of different ways to increase your working capital, whether that's other income that you are constantly adding to your account monthly, whether that's getting funded, right, and then being able to trade a larger sum of money, right? All those things are, it's easy to scale up. The difficult thing is getting yourself to this level. Once you're at that level, this is the wealth building level. If you could get here, then you'll be well on your way. Yeah. All right. So let's get into some things. Let's get into some things this morning, and we're going to open this up for general questions. But before we do that, I have a few questions to go over, and we're going to come back to this one. Right? This was the question asked in the CTM group this week. I said we'll take a look at it first. And it's asking, what time frame are you looking at to confirm if price is rolling over? This is a really good question. This question would go under managing trades, by the way. This would go under managing trades. What time frame are you looking to confirm if price is rolling over? Also, at times the price remains below a resistance for a while or retrace a bit before pushing through the resistance. So what is the indication that price is rolling over versus stepping back to punch through? In other words, how do you know when to take profits or when to allow the trade room to push through? Because that is really where you're going to make the difference. We'll talk about that in a little bit, and we'll come back to this question. First, we want to take a look at this, and here we are back at managing trades. I have had trades which were in profit to turn around and get stopped out at a loss. All right. So this is all right. We're starting off under managing trades. All right. I had trades that have been stopped out after being in profit. At the same time, you mentioned numerous times, let your winning trades run. So a few questions. And before I get into those questions, let me explain the way that you go from being break even, right? Break even to slightly profitable to constantly profitable. Is the way you get there is starting to push a couple of trades a month that actually go on to be higher profitable trades. What you're trying to do, or really what the awareness you need to have is what you're essentially doing, right? Is let's say that your average stop loss is 1 ATR. All right. That means your average win needs to be at least 2 ATR with a 50% win ratio. So most of the time you're basically staying at break even, except for those few trades a month, which push on to go to add to break up for those profits. You can't do those. You won't get those trades if you're not looking to push through at any of having the mindset of looking to push your trades, which means that a large portion of those trades you look to push are actually going to get stopped out at break even. Or you took a little bit of profit. If you're trying to push your winning trades, that means a large portion of those trades you're trying to push are going to go from going into profit at the first resistance if you're buying, and then going back to break even, right? You shouldn't take a loss. You shouldn't take if a trade hit the first resistance level when buying, that is when you should move your stop loss to break even. That shouldn't turn into a loss. Right? The trade could go 5, 10, 15 pips into profit and turn around into a loss 100%. But if you get to that first level, then there's no way you should be pushing it further. ATR is average true range. So let's say, for example, the EUR/US dollar moves 100 pips a day on average. The ATR would be 100 pips. Half ATR would be 50 pips. So the ATR is the range every day that the pair moves on average. So you have to be prepared that there's going to be a significant amount of trades you take that were in profit, get stopped out at break even. Your goal is to stay break even and then have those couple of trades a month that go on to give you your profits. You don't get these. You don't get here unless you start pushing your trades. All right. That's number one, mindset and knowing what you're doing. That's really important. You don't need we don't use ATR, or I don't use ATR, Wes, but you could just in indicators just search average true range. That will pull it up. Good morning, Jonathan. So before we get into these questions over here about, I don't know what they are. Before we get into them, let's take a look at this connected FX book, which at first glance may seem good, right? Because it's up 4% with a 1% drawdown. So when we start looking at and this is this is all for bettering ourselves. The whole point of this training session is to get all of us aligned where we need to be. And to do that, we need to start here, because I'm looking at these position sizes and I'm seeing the New Zealand dollar, Japanese yen is up to over 2%, but for 60 pips, right? And then I'm noticing here that this is up 0.2% for 30 pips. So this seems actually like this has got the correct position size for the account. And this is way over leveraged. So then the next thing I do is I look over at the history and I'm looking at the losses, 0.5%. Absolutely, this is all fantastic. These 2, 3 losses, 4 losses at 0.5%. The risk is being kept perfect. Do you see that? 0.6% was the highest loss. And then I'm looking at this gain of only 60 pips, and that's 4%. So that's something is very off over there. That's not good, because this is way over leveraged. And if this had been a 60 pip loss, you're looking at a huge drawdown and loss. And same thing over here. We have position sizes over here on the euro, Australian dollar, New Zealand dollar, US dollar that seem to be bigger. And why do I say they seem to be bigger? Because we're looking at a 77 pip loss is a 0.5% loss, right? But then a 60% gain is only 0.5% lane. You're setting why it's off to a good start. This is not manageable by using variable, at certain times, just taking really big leverage trades. All right, that is and I'm looking for some clarity on that, but that's something that's a glaring error. The first thing you need to have working, the first thing you need to have in order is your correct position size. And that should be starting out using a 0.5% per trade. Yes, you could definitely go from risking a 0.5% a trade to 1% after you're completing this stage, right? Think about it. How could you go from 1% a month to 2% a month? Well, you could go, if you're constantly profitable for 12 weeks, if you're able to do 1% a month, well, then you could just increase your risk from a 0.5% to 1%, right? As well as, of course, you're going to be better at pushing trades, better at discerning which trades to take. Those things will happen, but you could get there. That's why your first goal needs to be here. This is something that needs to be addressed right now, is the position size. It needs to be stable. You should start off only risking a 0.5%. And even though this on appearance looks good, and of course there's a lot of talent here, right? Everything needs to be done definitely in order. That's the first thing you need to have before you look at managing trades. The first thing you need to have in order is the correct position size. The second thing you need to have is the amount of trades you take per week. And we limit that to 3 trades. That doesn't put things into perspective at all, because Roman, the whole purpose of this is to get you here, which is extraordinary, right? This is the purpose for what you need to focus on, right? Because this is an extraordinary achievement, right? And trading is very nuanced. Hard to be able to give someone clear directions where they could achieve something like that. All right. So 0.5% is where you are at, right? Until you get 12 weeks here, you are risking a 0.5%, taking 3 trades a week. The 3 trades a week is absolutely critical. It's important, because if you're not limiting yourself to 3 trades a week, what you're doing then is you're just looking for setups and taking every setup that's available. And you're over trading. You'll have better success taking 3 trades. Now, is it possible that there is a trader who's on either this level or this level who's able to take maybe even 5 trades a week, 4 or 5 trades a week? Yeah. Once you get here, then you can make that adjustment if you need to. Are there some traders that will only take two trades a week? There are. There are some that prefer 2 trades a week. That's their comfortable zone. Again, after you get yourself to here, then you can make those little bit of adjustments. Yeah. So total risk percentage is based on the total portfolio. right? It's based on the total portfolio, which means for every $1,000, that is a $50 you're risking. Roman, your question is, if you have 20 years of experience, are you still in that range of 1 and 1.5 risk? That was my question. There's so many factors in play there, Roman, that this just not it's just irrelevant to this course and your training. So it doesn't really pertain to that. That's fluid and variable. All right. Trading this strategy, yes. Yeah, Ben. I mean, first of all, this is a good club to get into. No, Max, great question. This is a good question. Wouldn't the position size on a 0.5% be how tight the stop loss is? No. If your stop loss is down under here, which is right now looking to be like, let's call it 200 pips away, and you're risking a 0.5%, or if your stop loss is under this current price bar, which is only 20 pips away, you're risking a 0.5% of your account. No matter how far away your stop loss is. So one of the things that traders might need to do, a lot of traders initially put stop losses that are way too tight. A lot of traders over here put stop losses that are way too tight, and all they need to start doing is actually moving out their stop losses further. That's going to increase their win percentage by a large portion, right? And then they could work on managing those trades and actually pushing their winning trades higher. But before you get to managing trades, which we're going to start looking at right now, position size should be based on your stop loss as a function of risk. Yeah, your position size is exactly, Phil, based on how far away your stop loss is. That's what you're risking per trade. That's clear now for everyone. Before we get to this, which we're about to get to right now, and that's the managing the trade portion, which is going to get you from here to here. Once you start managing your trades better, you first have to be on board with you're risking a 0.5% per trade, and you're taking 3 trades per week. The 3 trades per week is forcing you to be discerning about the setups you take. That is going to take you much further than just being able to take every setup, which is not going to work out. All right, is everyone on board so we can move further into managing trades and some questions? Or is there something that we need to just clear up as far as the amount of trades per week or the risk per trade? Awesome. All right. And we're good, right? This is important for us to be doing together, this type of exercises. All right. Let's take a look at his first question over here. This is, would you please provide guidance as when to take profit versus when to stay, thinking that you are pushing on a winning trade? All right. Now we're getting into an area that is highly nuanced. It's highly nuanced, okay? So you have to have a very open and flexible mind. Do not paint yourself into something that's preventing you from being able to move forward. Question is how do you know when to push a trade and how do you know when to get out of a trade? Let's look at the Euro US dollar over here. All right, let's look at the Euro US dollar. And we saw that, by the way, 1 second. I'm looking here to give you a deeper perspective, okay? We were into this line of resistance over here. Over here, we were into resistance. So some traders were looking over here to get short over here and or over here. Those were good entries for the short side, okay? Now, if you were in either one of those trades with an entry over here or over here, The next thing that we saw happening was then this pattern developing, this descending wedge pattern developing, right? So if you're in this short and you're wondering, how far do you push it? When do you take profit? Because potential take profits on this trade that you're pushing for is either into the support down here or the one down here, right? Those are really the targets that you should have in mind when you got into this trade. Now, at the same time, you can only take what the market gives you, right? As we broke outside of this descending wedge pattern, that's a place to then exit this trade and lock in profits, right? Now, whether you took it on the break itself, the exit, on the break of the rising wedge itself right over here in this area, or if you took it right above this resistance, right? You could see on this trade, that would only be locking in a little bit of profit on both of those trades, right? That is, just for perspective, that's about 40 pips, right? If you took it down here, the exit, then it was a fantastic trade that you took, right? You took that's a good trade. You were pushing for down here or here, all right? So how do you know how much it will give or when to take profit? You never know how much ahead of time the market's going to give you. I'm always looking, when I take an entry, I'm always looking at the next resistance level above me to go ahead to either look then to move my stop loss to break even, right? I'm looking for another push above. So I'm not looking to take profit. I might want to take a small amount of the trade off. I might want to take as much as a third of the trade off over here, right? Or if this starts rolling over, I might want to either wait for the breakout at break even, or I might want to take the full position off if it becomes clear that this is being rejected. Now, there's no black and white rule on what you should do and when you should do when it comes to that. I'm telling you that you should have, wait, Kevin, I'll come back to that in a second. What you should have in your mind as you enter a trade, that you are looking not for you're looking for a stop level, your stop loss, right? That's either going to be down below the first swing low or maybe even the second swing low. You don't want your take profit to be the same distance, the same ratio as your stop loss. That's where a lot of people are right around here. Over here, as they're turning the corner to profitability, they're like break even or better, I call it. Basically, their stop losses are as far away as their take profits, right? And they're batting about 50%. So what the next thing they need to work on in order to move up to getting to this level is you need to stop taking profits so soon, right? Which means now you're going to start experiencing getting stopped out of some trades that were looking good. In the past, if you would have made it to the first buying over here, made it to the first resistance level, you would have considered that a good trade and you would have took your profit, because you can't go broke taking profits. You can't make money if you don't push trades. So instead of looking to get out over here, you're always looking to push through to the next level, at least. That's your mindset, which means you're going to have trades that are stopped out at break even, which is fine. That's okay. That's okay, because what you're trying to do over here is you're trying to stay as break even as possible until you get those few trades a month, which make the difference. So you have to be comfortable with being able to take losses. You have to be comfortable with taking break evens, right? And if you're not, you have to reprogram your mind. It's the only way. It is the only way it works. Let me go back a second and take a few questions and before I continue moving forward, just to make sure everyone is over here. So Steven I have a question on getting in that trade on the long side. It didn't retest. I wasn't giving an example of any trade at all. I was just showing if you got long over here, right, the next resistance. So we're focusing on managing a trade. I'm not looking. If you want to talk about entries after, we could talk about that in a little bit, but let's first continue with managing trades. Right. There's no entry over here that I would have took either. And I'm just talking about levels though. So I hope that's clear. Will is asking, why is it a good short when there is no retest? Are you talking about up here why there was a good short? Will, are you asking why this or this would have been a good short? Well, this was the rejection of resistance. This was the resistance holding. As resistance hold, the entry is always on the resumption downwards. That's the entry you use on a rejection of resistance, is the resumption downwards when price starts making a lower low. So that's just textbook. Are you looking? The text is blurry. Which text? Oh, don't worry about the text over here. Or is that maybe even easier to read? Please let me know. I'm reading the text, though. I'm reading you the text. That's for sure. So, but if it's zoomed in clearer, let me know. All right. Sorry about that. Do you need a retest? No. On a rejection of a resistance, you don't, or a support holding, you're not looking for a retest. You're looking for a retest, Will. This is your question. This is where you're getting confused, right? Over here, like if you're looking at this chart, right? This is an area of resistance right here. Hold on, Will. Hold on, Will. If you're looking right there, like that's resistance. If price makes a lower low over here, that's the entry. Now, if you break above, now you're looking to go long. You're looking for a retest. After the broken resistance level, to make sure it became support, to see if you're buying, you're looking for now a retest. There's a retest, right? There it holds, that's an entry, right? And then you have another entry over there. Both of those are acceptable entries, right? And you can see there you're looking for you have the break of resistance. Now you're looking for a retest and a resumption. Will, that's what you're looking for. Over here, when you're looking to short into resistance, if we would have just right here, right here made a lower low, you don't need any type of retest. That's the entry. You don't wait for another retest to enter. Got it? Retest is only for the breakout. There you go, Will. Easy. There you go. You do got it. But a resumption off of support or a rejection, like if you're in an uptrend, you pull back into support, you don't need a retest of the support. If you break a resistance above you, that's when you start looking. The part about the breakout and the retest confuses me, is you have to look at similar time frames for that. Why would you not use the break? We only use the breakout of the permeable. You're using the 8-hour time frame for all breakouts and retests. Do not get confused with anything that happens on the S&P 500. It's a different animal. We're trading FX. You're using the 8-hour time frame. All breakouts, all confirmations are done on the 8-hour time frame. All right. We've got a lot more questions. Let me make sure, as we have this time where we could go slower, just to make sure that I'm up to date with all the questions before we keep moving forward. How long do you give the trade to play out to achieve your 2.5 stop loss? Well, I mean, we're going to talk about this. Do you let them run to stopped out or achieved, or you pull them if they don't achieve with the time frame? So Stu, the reason I said I want to focus in on this question, right, is because as you go into the trade, you don't have in your mind that I'm taking a trade with looking for a 2.5-1 risk to reward. You don't have that type of mentality. And the reason for that is because you could take a trade that has a 1-to-1 risk reward all day long, right? Except you're not looking to take that one risk reward. What you're looking to do is you get into that. Let me show you an example. If I could pull one up, I'll just pull up, the next pair, I guess. Australian dollar, US dollar. Let's say over here right now, let's say on this trade, just for illustration purposes, we pull back into this support. It holds as support because that's a broken resistance right here. And then it resumes upward and we're taking this trade. Let's say that we have our stop loss down here after the last swing low. That means coming into that trade, I have a 1-to-1 risk reward. Stu, I don't want you to think that because you're looking for a 1 to 2.5 risk reward, you don't take this trade. Because here's what happens. This is a 1-to-1 risk reward going into this trade. But as you get into this resistance, if the trade goes in your favor, right, you now are moving your stop loss to break even. So that initial risk to reward of 1-to-1 you have has now all of a sudden moved into, you have no risk and you're still looking for this reward, but you're not looking to take profits here. You're looking to push that through. So overall, it's going to average in a much better risk to reward. I just don't want you to have that perspective that you're only looking for greater risk to rewards going into the trade, because the second part of your question is, well, you don't use any type of time based for your trade, right? You don't use any type of time preference. You are, as you enter the trade, you're waiting to either you're stopped out, right? Because if you took this on a signal, because this meet your trade criteria, every box is checked off of why you're taking this trade. When you enter the trade, then you will play the trade to either you're stopped out or you get the opportunity to take a little bit of profit off and or move your stop loss to break even. But you don't exit for any other reason at any time sooner, or then exit your trade because you're not liking how it's looking. Adam has a question if you should open one trade with half risk or open two trades at 25 risk. So Adam, that depends on what broker you're using. If you're using MetaTrader 4, you want to open either two positions or three positions. I would not use half risk, 25% risk on each trade. I would be looking to use something more of like 70-30 if you're opening two positions and taking that profit off the smaller piece quicker at the first area of resistance when buying or support when selling. Now, if you're using a broker like OANDA FX Trade, you could just enter the trade in one position and take profits. Take any piece amount off you want at any level. Yeah. So Stu, if you're entering a market and then it goes sideways, you're still honoring your initial stop loss and or place to go ahead and manage your trade, but try to avoid sideways markets from the get-go. Try to avoid sideways markets. That should be one of your criteria of discernment and entering a trade. Dwayne has a question. Using the same example, if you were looking at the long after the retest, how would you set the stop loss in this case? So you could have, if you're taking this trade right here, you have two opportunities to place a stop loss. You could either be placing your stop loss right below this area of, let me go ahead and fix that up. Right here below this area of support that you tested back into on the resumption up. That's a good place for a stop loss. And or down over here below this stop loss is also a good place. Depending on where you place your stop loss, you want to be risking 0.5% on either trade. It's the same thing. Now, if this trade moves into profit, obviously you don't need to go as far and you have a better risk to reward than this trade. But a lot of people who are over here their stop losses are too tight and they get stopped out of too many trades. So if that's happening to you, the adjustment that you want to make is stop making your stop losses so perfect. Move them down, maybe even over exaggerate a little bit, right? You also have right here below that last swing. Over exaggerate a little bit, which means that your overall profit is probably going to be a little muted, but you're going to see your win ratio increase. You're going to see your confidence increase. You're not going to be trading off of a back foot as you are right now, because you're going to be trading from a stronger position, and it's going to allow you to learn how to manage trades better. You're going to see that you're going to be moving up to this level quicker, a lot quicker, and then you'll get better at where to place your stop losses, and you'll begin making them tighter and putting them in a better area, increasing your overall wins, which is going to get you into this area over here. That's how you do it. If a trade breaks a trend line, do you exit when it breaks or after the candle has closed? Rich is also, that's the nuanced question, and we have a recent break of a trend line somewhere. Well, let's use this one over here. I'll just use this trend line over here as it broke out over here to the upside. Where is your stop loss? Do you do it as soon as it breaks, or should your stop loss be maybe up here above this resistance? Or should it be as right over here as price made a higher high above the trend line, right? And those are the two areas that you're looking at. It's not immediately, Richard, as you break the trend line, because you see lots of wicks like this. What you're looking for and is either the resistance, the highest local resistance above, or if you see a price bar make a higher high on the 8-hour time frame, that could also then be an exit. Do you move a stop loss before it confirms that level? Not sure exactly what you're talking about, but if you took this trade over here, Kevin, right? As soon as you came into the resistance, I move my stop loss. I don't wait for it to be rejected, and I don't wait for it to be to break out through. I wait for the closest resistance when buying or support when selling to do that. Yeah, I'm just trying also to make so there's no confusion on anyone's side, Steve, because there's different people watching it. So I'm just trying to explain things with the most clarity to bring clarity, to avoid confusion. If you're using an extra wide stop, at which point would you move to improve the risk reward? Wes, always the first support or resistance. All right. So the question is, if you're using wider stop losses, when do you move the stop loss to? That's always at the first support or resistance. I'm going through all the questions. That's what we're here for. So if we wait for the 8-hour candle to close above the support or resistance to confirm the breakout, yes. Or is the breakout only attributes to closes on the daily and then retest? The first portion of that, you're waiting for the 8-hour to close above to confirm the breakout of support and resistance. Is it possible that you got the Burma Bull, an 8-hour candle breaking above support, and then the next candle brings it back down, never giving you the entry, right? You close above the support level as here on the Australian dollar, US dollar. Is it possible that by the end of New York, we close below this support? Yes. What would that mean? That would mean that it was indeed a false breakout, but because we wait for the resumption of the trend upwards, we never would have had an entry. We would have been protected. But as soon as you see that 8-hour close above the support, that's when you are now looking for that resumption and entry. All right. The issues that most new traders have is when you're limiting yourself to 3 trades a week, and when you finally get into a trade and then you move your stop loss to break even, right? So Dan, this is interesting. Dan's saying that, a common issue is going to be that when you're limiting yourself to 3 trades a week, and when you finally get into a trade and move your stop loss to break even, you got to profit and you don't want it to take it, right? So this is now talking about mental toughness and fortitude, Dan, right? And that could be the difference between going from here to here, right? How are you able to be able to work at coming to a point in your trading where you're able to learn to push trades and able to overcome the fact that you're going to get stopped out a lot of trades that you had that were slightly into profit, because the first resistance level up from an entry is just slightly into profit. So think about that for a second. So how do you get over trades that you get into? Because now you're able to pick up good entries. Now you're learning, hey, wait a second. If I trade on the 8-hour time frame, if I buy off of support and sell off resistance, I find myself getting on the right side of the market now, which gets me over here pretty quickly. But now I want to keep going, and I don't like the fact that I'm getting stopped out of a good portion of trades that I'm taking. You got to have mental toughness. You got to have fortitude. Just having the knowledge that what's going to get you from there to here is exactly doing that. I think that's going to help you, Dan, be able to go ahead and be more mentally tough. In uptrends, buy off strong resistance. After price successfully and resumes upwards, what does price test successfully means? I'm sure this is a common question. And right over here, we're going to say that we're in a strong uptrend on the Australian dollar, US dollar. Considering the March bottom over the last few months, we've been in a strong uptrend. Yep, we're also in a strong downtrend if we take a step back. But we're in a strong uptrend over here. I'm buying off support. Will's asking, what does a price testing successfully means? That means right here, let me clean up the chart for you first. I think I should make clips of these individual questions as well. I think I should make that searchable. I'm not sure exactly how. We'll talk before I get into another question after this one. I'm going to pause to discuss this with all of you. So here we go. Right over here, you have a breakout in a strong uptrend of this resistance. You're looking to buy off support now, Will. What's a successful retest? A successful retest is a pullback on the 8-hour time frame. By pullback, I mean the 8-hour time frame making a lower high. Maybe that happens during Asia. Maybe it happens during London. Maybe it'll happen during New York tomorrow. But as now we've broke above this area over here of resistance that we want to see if it confirms to support, we're looking for a price to first pull back, making a lower high on the 8-hour time frame. When that happens, we're then looking to enter long on a resumption upwards whenever that happens, right? As long as the support level holds. If the support doesn't hold, we never take the long entry. That is what a successful test looks like. Now, I think what we should do is have a place where we could have just that small clip of what a successful retest looks like, right? And having that 1-minute clip there for people. Also, if we skip down to over here, if you skip down to the bottom where it says suggestions, it says that, the Telegram CTM community is a little noisy, way too noisy. Nearly everything is being discussed, and with hundreds of messages per day, it's hard to find it as a useful tool. Would you please consider creating a forum for your students and setting up specific topics of discussions? What type of venue your paid client can pick and choose from, which discussion topics they'd like to join. I, for one, am interested in trading major currency pairs. So I would prefer topics that are discussing trade setups, exit strategies, and trade opportunities in Forex major assets. Your thoughts? So this is something that I want to skip forward to and just discuss, because to be honest, it's been a long time since I have spent any time on a forum on the internet. That's not, I generally use Twitter and videos, right? So videos and YouTube. So I'm wondering what is better is having maybe like maybe having a support center where questions could be asked so that those questions are then answered, and then those are in the database of questions, and then making all of the answers to those questions short video clips, because I know I prefer video clips to forums. As far as having a place where people could just discuss setups, well, again, the question then is a separate Telegram group just for paid CTM members a place to discuss trade setups the thing to do? Or would that be better on a forum? I don't know. I haven't, again, used forums in a long time. So what do you all think? I would like to hear some opinions, and maybe just either forum, FAQ, or if you have an alternative suggestion. So we have right now with us, I think there's 50 people here. I'm interested to know what you prefer. If you could respond forum, FAQ, or if you have an alternative. And then we'll go back to answering some of these other questions that you guys had posted above. Yeah, the thing about forum, and I mean, I can't imagine myself keeping up with a forum, only because it's been a long time, probably over a decade, since I've spent any time on internet forums. So it would be more that, I mean, that's just true, that it's easier to maintain and to search through, so it's more effective. And then also Stefan is saying that a dedicated channel, right, for paid members to share their trades and justifications of their trades in real time. I think that's also good. I think that's really important. So I do like that as well. Yeah, but we don't have a searchable database for group members on YouTube, right? All right, pretty cool. There's a couple of questions that I saw where we left off that I want to go back to. And we're gonna, so by the way, this video is accessible using the same link you used to got in here. You could go ahead and you could watch the replay of this video. I think there are a couple of clips in this video. This video will be available permanently, right? For all, you'll be able to use this video. And I'll also make that available. You know, it needs to be available in a community section on the website. That's for sure. Let's continue over here. If you trade, Roman's asking, excuse me. Let me go back to a background. Let me put the focus on where the focus should be. It should be on this part over here, right? So Roman's asking, if you trade on average 2 to 3 trades per week and you have an example of 2 of these trades, I'm sure profit, do you allow to enter 1 and 2 more trades if you have 2 winners already to stick to? So I'm glad we moved here first. So Roman, first, you know, until you get to this stage where you've been consistently profitable for 12 weeks, you should be focused on 3 trades a week. As you get to this stage here, as you're to this level of a trader, you can then make little bit of adjustments, whether that adjustment is now, I'm going to risk 1% per trade. If that adjustment is now, I'm going to trade 2 trades a week. Or if that adjustment is, I'm going to trade 4 or 5 trades a week. You can make all those adjustments, but you should not be making those adjustments until you get here. You could get to this level by making 3 trades a week. So get there first. Understand what that entails. We talked about mental toughness of being able to turn trades that were slightly profitable into losses or break-even trades. You know, get yourself to that performing on that level, and then you can make those decisions. So in this case, when your stop loss is super wide, when the trade gets to your first resistance, do you move your stop loss to break even right away, or just a bit close to give the trade more to room? You know, pink elephant, that's also a nuance. I personally would lean towards break even. You could do either one. Based on the 8-hour time frame method of trading, what do you reckon the possibility of a winning trade is? Jimmy, I think in the beginning, you're in the beginning over here, first goal, right? Your win ratio should be right around 50%. You'll be able to do that pretty quick. Back to now, we're back to the area of the sections where we're talking about, you guys, the forums and the frequently asked questions. I'm going to catch up on those really quick. A dedicated session. What is a successful price test that is not a breakout scenario? You can't, Will, you could have a trade that enters. This could be a successful hold here and breakout. Let's say the entry was right there as price made a higher high, and then you could get stopped out and go down. That would be a failure. That would not be successful. That's always a possibility when you enter a trade, that it's going to go against you, and you should be actually just have the mindset that as you enter the trade, it's going to go against you. So then you're not worried about it hitting your stop. For example, I would like to see real examples where you go through the actual calculation of position size based on pips. Yeah, so Kevin, I'm not thinking that this is something that people really need help on, right? From my experience, traders, as soon as they're able to get from the position where they're going on to a demo account, when they're going on to a demo account, they know what setups they're looking for, and they're now looking to take 3 trades a week. And they're doing that at the right risk to reward ratio, at the right risk level of 0.5% per trade, 3 trades a week, that they're then able to go ahead and they're able to know what the calculation based on pip values and what it should be. If you're using OANDA, they have a built-in calculator. And if not, there is right here on myFXbook. If you look on myFXbook, if you go down to calculators, and then you go down over here to where it says position size calculator, you just put in the size of your account, right? You put in how much you want to risk, 0.5%. You then put in how far away your stop loss is, right? And then you calculate and it'll tell you, well, you should be using, you know, 0.2 lots, or if you're using units in OANDA, 2,500 lots, because you're risking $25. So Kevin, that's what you should be using to do that. But you know, well, here's a live video showing how to do that. If you're using OANDA and you need one done with OANDA as well, I mean, maybe I could connect it through TradingView and do that and show you. But that's something that you should be able to do and handle, right? All right. Forums could be, I mean, yeah, I just haven't appreciated a forum in a long time. Regarding 3 trades per week, if you wait for a better setup, that setup may never come. Isn't that working? Yeah, Max, I don't run into trouble where I've run into trouble where people are taking too many trade setups. That happens frequently, where people take every setup, you know, because you learn to recognize the setup and then you could just take the setup. People take too many. And that's a problem. I've never run into a problem where by limiting yourself to 3 trades a week that you're waiting for setups that never come. And if that were to occur, if you were meeting that type of obstacle, the only way to beat that obstacle was force yourself to take 3 trades a week. You have to do it. That's your goal. That's your mission. That's what you need to accomplish is 3 trades a week. All right. I got into a gold trade this morning. When should I move my stop loss? See, Drew, that's not what we're looking to do over here. We'll talk about that. Drew is saying, I got into a gold trade this morning, and where do I move my stop loss? And, you know, what should I be looking to do? So, you know, the purpose of this course is get you to be able to make those decisions yourself. If you're first of all taking a trade and you don't know where to put your stop loss in, you're not yet ready here, right? So where would you be? You would be really working and making sure you know what setups to take, when to take them, and how to manage them. So I guess what you're asking, Drew, is where do you place your stop loss on the 8-hour time frame, right? So if you're at that portion, you should not really yet be on a demo account where you are looking to take 3 trades a week at the right size. You should be working towards there, but you should not be tracking your progress yet. You should still be working through what a proper trade looks like. So as you enter this long trade over here, if you took this breakout over here as price broke out above the resistance and making a higher high, right? Gold, we say that, yeah, it does, unlike FX, attempt to break out. By the way, Drew, you should not even be on gold. You should not even be trading gold. You should be trading only FX pairs on the 8-hour. It's going to be easier for you. That's where you should start. But where would your stop loss be here? It's either going to be under the last swing low right over there, right? Which is a good stop loss. Or it's going to be under this last area of support down over here. It's going to be in one of those 2 areas, right? You could also use the true trend. You could look for the last time that the entry CCI was pulled back below the 0 line, right? Which is that swing low right here that we put our stop, or the one previous. You can see the previous one was right there also where we put our stop. So whichever is easier for you to use, to do for putting your stop loss, right? That's where you want to put your stop loss in. Drew, you're able now to recognize some setups. I want you to be looking at Forex to do that, focus more on there. And then, you know, you should, within the next few days, by the end of this week, have worked this out now, where you could then move to a demo account where you'd be risking 0.5% per trade and taking 3 trades per week. From there, we could really make progress. From there, we could really make progress and work towards getting you from, you know, someone who's able to be a break-even trader and move you towards this next phase. Jenny, hi. Yeah, that definitely applies if the support or resistance is 8 years old. So yeah, of course, the longer the support level and resistance level, the more important it is. But you're not only looking at I was zoomed in right here to see where that resistance is. I don't need to zoom all the way back out here to 2012. I can't even, why? It'll be in a higher time frame. So I'm not even focused on the resistance over here. I was just using, Drew. I was just using the 8-hour time frame to know that this is where we peaked out. This is the area of resistance. I don't know. Maybe that's not something you can teach. That might just be experience. Don't even focus on that. But yes, 8-hour, 5-year trend line on the US dollar, Japanese yen. We are watching it because when a 5-year trend line or support or resistance breaks, that's a big move in the markets. This yellow trend line here that I'm watching is a 5-year trend line. Those are very important levels to watch. Drew? Wes is asking a question over here. I feel like I'm very far behind the questions, but I hope that this is providing a lot of value. That's the main thing. Wes is asking, if you have an uptrending market, would you put a buy order on the support or the pullback since you do not need a retest? So I'm not fully understanding the question. I'm going to just go over here to the Australian dollar, US dollar. I'm going to the 8-hour, and you're asking, like, if you're in a strong uptrending market, would you put a buy order in at the support? No, I don't put the buy order in at the support. Like right here, Will, is the perfect example of what you're asking. It took me a minute to figure out what you're asking. I'm in an uptrend. Here's the support. Do I have a buy order there as I come back down and get it filled? Absolutely not. I need a resumption upwards to give me a buy signal. Otherwise, I'm keeping myself protected out of the trade, right? So this could have kept going down another level. Over here was when I got the indication, all right, maybe now it's time to go long. Wes, you always wait for the level to be confirmed, retested, and the resumption up. It just increases your overall profitability. When identifying the trend to trade along with, what's the time horizon that should be adopted? Should it be the trend over the last few days, over the last few weeks or months? Dwayne, great question. What we're looking at over here also on the Australian dollar, US dollar is, right, how did you know when this was an uptrend? If we're looking at, let's go over here. This is a downtrend. As clear as day to anyone, this is a downtrend, which means you continue only look to sell resistance. So what happens over here, right? We come back up. You're looking to sell this resistance over here, right? A little follow through, comes back up, breaks above this resistance. Are you still looking to sell this resistance? Yes. You could see, again, into the next support. No follow through really. It was jumpy. It was about over here, right? Where now we said, all right, now, after taking out this level over here, now we could start buying supports. And over here, I didn't take any buys off supports, but we started pointing out to others. If you're now in the habit of buying off supports, it makes sense. We're in an uptrend. How far was that? That was about, let's see, let's put it here. It's about 1 month, about 1 month. And then on the swing traders time frame, we said, now, all right, now we got an uptrend. We could take advantage over here, buy off supports. And or at the same time, you could say, and this is going back a few months on your screen. This is answering your question, Dwayne. If this is also a downtrend, I could sell off resistance. All right, so it's nuanced. It's nuanced. It's, depending on what you're looking at. Am I looking at this being a downtrend? Yeah. Could I sell off resistance? Even today, even in this area, could you sell this resistance? Yeah. You could sell that resistance if you're looking at that as being in a downtrend, as in even all the way up here, you could say that was selling a resistance. Now, you could also at this point be focused in over here, which is where your chart should be looking like this, right? This is like the go-to amount of bars you might be looking at your chart. And I could say, yeah, I'm clearly in an uptrend. I'm buying off support. Both those things work. It's nuanced. It's not black and white. Brahma Bulls, appreciated it. Thank you. Can't see the true question because of the question. Thanks, Max. Thanks, Adam. Should new traders always sell off resistance, or is there a signal that one should force the trade further? NM is asking if new traders should always sell off the resistance, or is there a signal that one should force the trade further? I mean, keep it simple, right? New traders, experienced traders, buy off of support in uptrends, sell off of resistance in downtrends. To keep it simple, to keep it so that you could get someone with no experience, or someone who's been in the markets for 10 years, to go here quickly and then over to here. How do you do that? Listen, you wait for the retest of the level. You wait for it to be a successful retest. Wait for the 8-hour price to resume upwards when buying off a support level. Take your buys off there. It's going to get you off the beginning on the right side of trades. And then it's going to get you in a position where you could start managing your trades, moving you up towards the next level here. And finally and ultimately towards the goal. All right, I think this is a good session. I'm going to go get some breakfast. If there's anyone here, though, has spent the time and has a question that they would like to be discussed right now, then please go ahead and ask that. We'll close with that. And otherwise, we will call it a day. The resumption only needs to be the resumption only needs to be the 8-hour time frame, making a higher high off of holding the support. That's a resumption, right? Or Ben, if the 8-hour to get a retest, you need first here the 8-hour time frame to make a higher low than the previous price bar. That would then set up a retest. A retest would then be a successful retest, price then made a higher high with while holding the level. That's all you need to look for. That's done on the 8-hour time frame. Hey, everybody, I appreciate it. I definitely it was a great session. Thanks for all spending the time with me for the questions, for helping me make this all clearer. I really want to start seeing, there's a lot of people here. There's some people that are working through here. I want to get a lot of these people over to here. And if you're not yet here, I need to get you there pretty quickly. So that's our focus. I hope this type of resource is going to help people do that more efficiently. Having the overall goal in mind is critical. So we'll see. All right, everyone. That's what I like to hear. Well, Rich, that means you got to smash the like button. If you learned something, you got to hit the like button, show that love. That's awesome. That's awesome. That's awesome. All right, everyone. Thank you. I'll see you all tomorrow.